welcome to BloombergQuint. Steel strip wheels have reported number for the December quarter. Top line, we're seeing some amount of downtick coming in to an extent of 28%. And operational performance too, we've seen a 31% dip out there on year-on-year basis. But then joining us to take the discussion forward is Mohan Joshi, ED of the company. Hello and welcome to BloombergQuint. Thank you so much for joining us. I'm going to start off by asking you about what has actually percolated down behind the decline of the top line numbers.
Thanks a lot for having me. I think the major concentration of the downfall is coming from the CV segment. Everybody that it is still reeling under the pressure of high inventory and the confusion amongst the buyers of BS4 to BS6 changeover has improved a lot, to be doing good. Tractor is also recovering. I think export has exceeding, and the alloy segment, which we have already reported that it is fully booked for the quarter 4 in terms of the optimization of the plant. So I think he's seemingly much more better results, which is going to be compared to quarter, and I think that we are in line with utilizing all our plants to the tune of, except the commercial vehicle, in the clarity for the BR. And the scrappage policy is yet to come, and we anticipate that these two plants of commercial vehicle will continue to run at close utilization as we speak.
All right, let's chat about your exports in that case, because they've remained on the stronger side. The company has achieved the highest ever volume growth rather in the export, 40% growth out there. I'd like to understand which markets typically are contributing towards this growth and what can be expected forward in the next quarter.
What we expect is last segment, which is coming in on the back of the trade war and the anti-dumping duty on the Chinese products which have been imposed for the next 5 years. And we anticipate that in the financial year 2021, we can expect a 25 to 30% growth, which we are anticipating to come in the export segment. And the quantum of that, export will be contributing close to 16 to 18% of total turnover versus percent with an accretive EBITDA, wherein the export EBITDA is 18 to 18 at 12 to 13%.
Okay, and your domestic business in commercial vehicle segment, that remains weak right now, even as we're seeing some amount of a volume uptick typically from passenger vehicle. When do you expect the revival to come in from this segment?
I think we are anticipating the infrastructure-led growth coming in by the government of India. But as the industry is so confused right now in terms of the first bottleneck, which is the BS4 to BS6 changeover, so we anticipate some of the green shoots to come in the June quarter of the next financial year. Create that roadblocks away from you that only one technology is available, which is BS6, and the consumer will not have two choices. The second thing which can come in is that we are anticipating the scrappage policy to be implemented by a higher amount of tackle, which is maybe 20 years and old, and that can spur a really good demand for the CV segment. But all depends in terms of the government intervention. Then, talking about this policy for quite some time, it's just a matter of time. Maybe it comes out to the regulation and what starts to be trickling in for the sector, and then obviously all the growth engine for the company will start functioning the way that they were functioning for the past 2-3 years.
All right, Mr. Joshi, then let's chat about your guidance per se. I have a two-part question here. One is the export revenue guidance for FY20. You think you'd be able to deliver to that number of 250 odd crore, and also you've guided for a capex of around 500 million for the next year and 400 million rupees for FY22. So in a weak environment like this, you think the company is pretty much committed to the capex guidance?
So first, I am 100% committed towards this guidance, and we may overshoot this guidance. On the higher capex side, I think this entire capex is happening on the alloy wheel side, which is the first phase of the alloy wheel is already sold out to the customer, where in the long-term agreements, and we anticipate that we have agreed on with the cost of the capacity which we are experiencing, which may come to us in the month of August, September, October. On upwards. This CapEx ASAP in terms of capacity bottlenecks and the commitment that we have already agreed with the customers. So I think within the gamut, we are not expanding any of the capacity on the steel wheel business, but the entire CapEx is happening towards the alloy wheel business, wherein I think the EBITDA, which is getting generated to the 17-18%, will augment this CapEx capability, and we are committed towards that.
All right. When you say that you actually estimate to overshoot your export guidance, by what number are you expecting that to exceed by for this financial year? And also, if you could leave us with your margin guidance for this year, typically as a whole, along with FY21.
So for the full financial year, exports could be in the range of 260 to 265 crores, and I think on the margin front, we are hovering around between 12 to 12.2%, and we anticipate the Q4 margins to be the best amongst the lot, and we will be achieving odd on the EBITDA front, which we are anticipating to carry forward to the next financial year.
Mr. Joshi, we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint.